Hello everyone. Today we talk about a finance is the invisible engine of global economy. It's the heartbeats of the global economy for small saving to big builds. What is finance? Think of finance as the ultimate connector. On one hand, it creates the products that keep business running, and on the other hand, it facilitates a handshake between those who have extra funds and those with the ideas or need to use them. According to Schumpeterian theories, finance is the catalyst for progress. Without financial intermediation, saving would remain sterile or unproductive. Finance ensures that ambitious, world-changing projects get the funds they need to move from an ideas to a realities. The public funding is the backbone of the national development. It demonstrates how long-term borrowing allows governments to build essential infrastructure like a road and a rail and maintain a robust healthcare system that would otherwise be impossible to fund through tax alone. What is the corporate financing? To grow and innovate, companies use two main tools as the equity, where they share profits with shareholders, and bond, which offer lower risk of investor but require scheduled repayments. Both are vital for scaling operations and funding future breakthroughs. Connecting saving to investments. The financial cycle broken down into three case studies. The first, the collection of savings from a bank and a pension fund. The second is the intermediation where market and funds manage the resources. And finally, deployment of the capital into products projects that drive real-world economic. Financial markets, deep and dynamic. They provide a liquidity needed for capital to circulate freely and the tools needed to diversify the investments, like trading fluidity. And, and finally, they assure that this market transforms the individual risk into a manageable, shared responsibility across the global economy. What is innovation growth? Financing innovative projects. The financing innovative project is begin with an idea, innovating concept or funding team. After that, they use a VC funding to charge a capital or to seed a funding. And finally, they needing to make the project the same in the reality existing in the world. The impact of a finance on growth. You see the graph show a consistently high correlation across a multiple study. Finance achieves this by doing two things essentially, where assure capital liquidity and reduce the risk for those who provide the capital. Finance an essential PR for the future. This summary highlights how finance impacts every level of the economy, whether it's through international expansion for corporations, infrastructure for states, or wealth growing for individuals. The finance system ensures that the capital is never stagnant, but always working to support growth. That's it for today, guys. Thank you and see you soon.